Hello everyone, this is CA Rekha. So today in this session, I'm going to tell about SA 520, that is Analytical Procedures. So this is coming as your 8th chapter in the ICI study material. So before I go on to the chapter, there are few terms which needs to be explained. Okay, so first we'll see what is the definition of this particular term called Analytical Procedures or what Analytical Procedures are all about. So analytical procedures are procedures which is used to evaluate your financial information. So financial information is especially those contained in your balance sheet, P&L, cash flow. So whatever is there in those financial statements or financial information, you are going to evaluate that. How you are going to evaluate that? By finding out the relationships, plausible relationship. Plausible means what? Probable. What are the probable relationship between financial and non-financial companies? So I am going to evaluate the data, going to evaluate the financial information by finding out or by analyzing the plausible relationship between financial and non-financial information. So this is your analytical procedure, definition of what an analytical procedure is. So now why am I doing such procedures? What is the use of doing such, or what is the objective of doing the analytical procedures? So we'll come to the objective. The main objective of doing these analytical procedures is what? First, to obtain a reliable audit evidence. To obtain a reliable and relevant audit evidence. So reliable and relevant audit evidence. Secondly is what? Second is evaluating the financial information by analyzing the components. Different components, P&L, let it be balance sheet, let it be your cash flow, different components, you are analyzing that, and then you are evaluating the financial information. And why I am doing, or why the auditor is doing that, he has to make sure that whatever the auditor has got an understanding about the entity, whatever the auditor has understood about the environment of audit or audit environment or about the entity is consistent with those being shown by the financials. So in order to make sure his understanding about the entity, about the operations of the entity is consistent with the financials, whatever is being represented by the financials, he does analytical procedure. So what are the objectives? One is to obtain reliable and relevant audit evidence. Second is to analyze the financial statements or financial information by evaluating each and every component of the financials. Third is what? Now to make sure whatever the auditor has understood about the entity, or his understanding or his knowledge about the entity is consistent with those represented by the financials. Now, when do I undertake this analytical procedure? That is the next question. Before going on to the next question, here we came across a term called audit evidence. So what is audit evidence? Actually, this is coming before us. I'll tell you in a brief what audit evidence. Audit evidence, in a simple terminology, it is the information that the auditor uses to arrive at the conclusions. So whatever information the auditor is using to arrive at conclusions, based on which his report is being given. So this information is called as audit evidence. So in order to obtain the audit evidence, he is doing certain kind of procedures. These procedures are called as your audit procedures. So the nature, timing and extent of audit procedures, that is how much audit procedures I have to do, what time I have to apply these procedures, for how long I have to apply these procedures, in order to what? In order to obtain the information on which or based on which I am giving the opinion. That is nothing but your audit evidence. So this audit evidence depends, all this I think we have seen in the previous chapter, audit planning. So these all will be covered in the audit planning, nature, timing and extent of audit procedures to be applied in order to obtain a reliable and relevant audit evidence. So as I said, what audit evidence is? The information used by the auditor to arrive at conclusions on which his report is based. Now, there are two main qualities of audit evidence. The first quality is audit evidence should be sufficient, and the next one is it should be appropriate. So what is sufficient and appropriate? Sufficient means the quantity of audit evidence that the particular auditor is obtaining. It should be proper, or it should be consistent with whatever financials is verifying. So it should be good in quantity as well as in quality. So there are two terms associated with audit evidence. So whenever you write audit evidence, make sure that you bring in the two terms, sufficient and appropriate audit evidence. So sufficiency and appropriateness both should be there. Not just I am getting n number of records, n number of transactions to support the financials or support the misstatement or support whatever is the conclusions I have reached, but it should also be relevant. It should have the required quality. So sufficient and appropriateness of audit evidence again is an important factor while considering or while obtaining audit evidence. So audit evidence, we know how we are obtaining the audit evidence by doing audit procedures. Audit procedures and nature, timing and extent of audit procedures matter. Audit evidence, the information that is used, and there should be two things, that is sufficient and appropriateness. Now again here I am obtaining reliable and relevant audit evidence by this method of using analytical procedure. Now when do I use the analytical procedure? So when do I use a analytical procedure? Is it just I use during the time of planning the audit, or do I use it throughout the audit? Actually analytical procedure is used first at the beginning of the audit, start of the audit. Okay, so I'm using it at the planning phase. During the planning phase I'm using the analytical procedures, or I'm making sure that I do the analytical procedures. Second, I'm doing it at the testing and completion phase. Testing and completion phase is nothing, there is an ongoing audit phase. So two phases I use. I use at the planning, I use it at the testing phase, and I also use at the completion phase. But there is a difference. How the audit analytical procedures are being used. In the planning phase, that is when I am planning the audit, the kind of analytical procedures I use is only my analytical procedures. But when I am doing the testing, or when I am going to complete the audit, when the audit is being carried out, that time whatever audit procedures I use, analytical procedures I use is substantive analytical procedures. So we'll see what this substantive means. What is an analytical procedure we are seeing. So we haven't seen what the substantive is. So we'll see what is substantive analytical procedures. Now, so till now we covered what are analytical procedures, what is the audit evidence, what is the objective of analytical procedures, and what are the qualities required for the audit evidence, and what are the audit procedures. Audit, the different methods of obtaining audit evidence I haven't discussed so far. Now, while applying the audit procedures, so what are the different kinds of audit procedures I am applying? So this coming to this part, so there is a relevance why I am bringing this topic in, because I said analytical procedures are used during the testing and also during the planning phase, and the analytical procedure that we use is substantive analytical procedure. So we'll see what substantive analytical procedure is. And so before coming to substantive analytical procedure, just a small intro on what are the different kinds of audit procedures. So basically your audit procedures are divided into two. One is what? One is your risk assessment procedures, and the second one is further audit procedures. So what is risk assessment procedures? Risk assessment procedures is nothing but those procedures that is applied by the auditor, taking into consideration the risk of material misstatement that might be present in the financials. By how will he get the information? How will we come to that particular judgment? By understanding the entity, its operation, and the structure. So by understanding the client, understanding the nature of operation, by understanding the governance structure, by understanding what are the ways in which the financials are prepared, by understanding the accounting system of the particular client, the auditor will come to a judgment, or will come to a particular conclusion regarding the risk of material. That is purely the judgment of the auditor. How much risk is there associated with the financials. So first is your risk assessment procedures. Second is further audit procedures. Under further audit procedures, it is again divided into two. One is your compliance procedures, and the next is your substantive procedures. So basically audit procedures, there are two different types. One is your risk assessment procedures, and the other is your further audit procedures. Risk assessment procedures are those procedures that the auditor applies in order to evaluate the risk of material misstatement by understanding the entity and its operation. So how far the entity, how the entity is operating, what is the governance structure, what is the investment that it has made, what is the accounting system followed by the entity, when are the reports being issued. So by understanding the entity, he'll come to a conclusion regarding what is the risk or potential risk that particular entity is facing. So we have a set of procedures called as risk of material, that is a risk assessment procedures. The second set is what your further audit procedures. Under further audit procedures, there are two parts. One is your compliance procedures and the next is your substantive procedures. So what is compliance? Compliance, the word means what? Some kind of a rule, right? There should be some kind of rules, I have to comply to that. So this compliance procedures is also called as a test of control. Test of control. And the substantive not extensive. I'm doing it extensively. Whatever testing I'm doing, whatever verification I'm doing it in a detailed way. I'm doing it in an extensive way. So this substantive procedures are also called as test of detail. So there are two things. One is test of control and test of detail. So test of control, otherwise called as compliance procedures. Test of detail, otherwise called as substantive procedures. So these two procedures, I'll tell you in brief what each it is, because we'll be covering in the chapter of internal control. Now, what is compliance procedures? Compliance procedures are those procedures which is used by the auditor in order to check the effectiveness of internal control. That is required for throughout the audit, right? So in order to check the effectiveness of internal control, there are certain procedures that is used by the auditor. So those kind of procedures are called as compliance procedures. So what are the things that you check in the internal control? Whether the internal control is effective. First, you check whether internal control is present. So we know what internal control is. Internal control is what? A set of policies or procedures or processes that is designed by the organization to make sure it is able to fulfill the objectives effectively and efficiently. So those kind of rules and processes whichever the organization is following, those are called as internal controls. First, I have to see whether the internal control is in place in a particular organization. Only if it is in place, then I can check whether it is effective or not, right? So first I have to check whether it is in place. Second is what? Second, I have to check whether the particular internal control is designed properly, whether I am designing it properly, whether it is properly implemented. Sometimes you might have the required say what processes in place. It might be there, it might be designed properly, but it is not implemented properly. Sometimes it might be implemented also, but even though it is implemented, it is not maintained or it is not properly reviewed. So in such cases, I have to check whether internal control is implemented, designed, implemented and maintained effectively. So this is our whether is there any lacuna between the whether there is any kind of a lack in the internal control in the system. So whether internal control is present, if it is present, if it is designed, implemented and maintained properly, and whether it is working effectively. So all the three things I have to check. Now, internal control, there are different methods. One of the method is your segregation of duties, authorization of transaction. There are n number of methods of internal control. We'll look into it in detail in the next in the chapter of internal control. I mean, one small example if I can give you. We may have, say, take for example a firm, the firm in which you are working. There or in your house itself, you might be having a CCTV or a 24/7 surveillance camera. Your CCTV camera is there. This is a kind of very basic example of internal control. So why does this is put in the first place? It is put in the first place in order to make sure that the house owner or the person whoever is residing in the house is able to check upon whatever is happening in the house at the time when he is not there. Say someone else is there or he has hired some staff or someone. I want to check upon whatever is happening in the house. If there is any kind of thing that is not required, some kind of a discrepancy is there, I want to detect that. So in order to ensure everything is functioning properly, I have kept a CCTV camera. So mainly three objectives. I want to prevent something worse from happening, or if something has already happened, I want to detect what has happened, and after detecting, I want to make sure that it is not going to happen again, or I want to correct the weakness in that. So mainly three purposes: prevent, detect and correct. So this is the main function of internal controls. So this is again, I'm not describing it here. So 3 functions this is being carried out. So I have implemented, I have put a CCTV camera at my house. But this is your designing phase. The camera is a very good one, a very good quality one. I'm also getting the updates via mobile. I'm able to see through my television also. I'm able to see whatever is happening. So at each and every time, whatever is happening at the home, I'm able to see from wherever place, whichever place I'm located. So as such, the particular camera is functioning fine, and it's a camera from a very good company having a good reputation, and I have placed it. So the design part is perfect. The company from which I have bought the camera is good. The camera is functioning perfect. Now the camera is there, implemented. I have bought the camera is a good one. Now implementation is what I should place the camera at those places where I feel some activity might happen in my absence, right? It is not that I buy a camera and place it outside my house. I should implement it at the particular control points, whichever. Say for example, I am keeping one at my drawing room, I am keeping one at the hall, one near the kitchen. So 3-4 areas are there where I suspect some activity could happen in my absence. So this comes as your implementation part, how I am implementing that. Now third one is maintaining and reviewing that. Now I bought a very good camera from a very good company. I have kept the camera at the vital or main points, whichever is there in my home, so that everything that is happening in the home is captured. But is it enough that I buy a camera and keep it and go? I'm not actually monitoring whatever is happening. So this happens in most of the cases. Most companies or most entities or most places, even in very small companies also, what happens is they keep a CCTV camera. They will be like real time, you'll be able to see what is happening, but there is no constant monitoring. They just believe that keeping a CCTV camera and buying a good quality camera, keeping it at a main point serves the purpose. No, it doesn't serve the purpose. You have to monitor it. Only when you monitor it, you can detect if there is any kind of activity or unwanted activity going on, right? So the third step is maintenance and review. So there are 3 things: design, implementation, then maintenance and review. So all the 3 things in the CCTV camera example, all the 3 things: you are buying a good one, you are keeping it at the vital points, you are monitoring it, and also you are checking whether the CCTV camera is functioning at regular intervals. Not that you buy one, keep one, and then forget about it. You have to constantly check upon, like say weekly or monthly once, you check upon whether the particular camera is functioning properly or not, or whether any person is actually offing that particular camera and then again after a particular period of time it is being. So all these things comes under your maintenance and review part. So all these things I have to check. So these kind of things will be included in your so-called compliance procedures. Now coming to the next part, what is substantive procedures? Say the controls is not there in that particular organization, or control is not working properly. In that case, what it has a greater impact on the audit, because whatever audit evidence or whatever audit procedures I do, the source document itself might be corrupt. It must be manipulative, right? So there is no proper controls that is in the particular organization. Say for example, one person is placing the sales order. Okay, he is giving the sales, he is placing the sales, and he is also entering in the books. What happens? I am doing the sales, or what? Say for example, the person, whoever is approving I'll take the example of purchase order. I am approving the purchase orders. So I am approving, say for 1 lakh purchase order, I am approving. And the goods receipt note also, I am handling whether the particular goods have reached the particular entity or not. I am maintaining the goods receipt note register, and I am also doing the accounting. I am doing all the 3 activities. Don't you think there could be some kind of manipulation? I can purchase a number of purchase orders as I need, because I am the sole person who is authorizing that. I am the person who is receiving the notes. Sometimes I may not even buy the required commodity or required raw material, but I can actually raise an invoice, or I can raise a duplicate invoice saying that these things were ordered. And the same things I have also written in my goods receipt note. So goods receipt note, I am the person who is actually writing. So I am writing it as those goods are, or those products are received. and again I am doing the accounting part. So sometimes I might not have even ordered the product, or so the product itself might not be ordered, but I am manipulating all the records, and finally what the company is at loss. So this whole process is again what, due to lack of internal control, or maybe you can say segregation of duties. There is no proper segregation of duties, no proper control. It could be due to anything. So these kind of things, if it is there, there is no proper internal control, no proper segregation of duties, whatever source document, whatever records, whatever journals, whatever vouchers, whatever books of accounts is being prepared, can I rely on that? No, I cannot rely on that. So in such cases, I need to do a test of detail. Each and every component I have to test it. Extensive testing is required. So in those scenarios where the control is ineffective, or control is not there, or control is not functioning properly, internal control is not functioning properly, then whatever procedures I do in order to test in detail, in order to make sure whatever whatever the financials represents is true and fair, in such cases whatever procedures I adopt is called as your substantive procedures. So there are two things. One is your compliance procedures, next is your substantive procedures. Usually substantive procedures is used to test the assertions. So assertions, so we got a new term called assertions, right? So this is something I think we haven't discussed this before, what assertions are. So assertions is nothing but the representations that is made by the management, or the claims that the management makes. What are the claims? What are the claims the management makes, and whatever claims the management makes, whatever the auditor considers, in order to ensure there is a risk of potential misstatement. So all the claims that is made by the management, which is considered by the auditor while making a judgment with respect to potential risk of material misstatement, these are called as assertions. So for example, your assertions, one of the assertions is existence. Existence is the management says there is an assertion, that makes an assertion or makes a claim of existence. So as an auditor, what I have to do, or what I have to make sure that the financial, say fixed assets, their fixed assets are actually existing. So I have to do a physical verification, whether physical verification of the fixed asset is done at regular intervals. So one thing, whether whatever fixed asset is there, is it in the name of that particular company, is it mortgaged, or whatever fixed asset is there, does it belong to the company, or is it the fixed assets of someone else? So all these things I have to check for existence. So say the next assertion is rights and obligations. So what is rights and obligations? All the assets, the entity has all the control over the entire assets, and the liabilities are the obligations. So it actually shows, the particular management is telling these assets are under control of the entity, and whatever obligations that is being stated are the liabilities of the entity. It has to repay that. So rights and obligation is another assertion. So again, the auditor has to check, or auditor has to obtain evidence of this particular assertion, rights and obligation, whether whatever liabilities that is being stated are actually liabilities of that particular entity, whether all the liabilities are coming into that financials, or whether any liabilities are not being represented here, whatever assets that is shown in the balance sheet actually belong to the entity, whether they are the real owners, whether it is belonging to the entity or whether it is being mortgaged, whatever. So has to make sure that this particular assertion is right. Next one I can say accuracy, completeness, your cut-off procedures, whether all the required transactions are recorded in the particular or correct accounting period. That is another assertion. So all these assertions are there. So whenever, in order to check in detail of all these assertions, I use the so-called substantive procedures. So this is all about your different kinds of procedures. We studied about what analytical procedures are, what is audit evidence, what is the main requirement for audit evidence, what are audit procedures, what are the two audit procedures. Now, when the audit analytical procedures are used during the planning and the testing and completion phase. Whatever I am using during the planning phase is only analytical procedures, and that analytical procedures basically pertains to what? First, when I am planning, first I have to pertains to understanding the client, its operation, its investment structure, its governance structure, what is the accounting system followed by the entity, what are the different types of, how the financials are prepared, what are the controls in place, all these things I have to do. And also what is the nature, timing and the extent of the audit procedures that I have to do. All these are taken into consideration while during the planning phase. These are the analytical procedures that is concerned with the planning phase. Now coming to your testing and the completion phase. In these we use a substantive analytical procedure. Substantive analytical procedures in depth or in detail test of details and testing each and every assertion in a detailed manner. So when can I apply substantive analytical procedure? That is the next question. So when can I apply substantive analytical procedure? Substantive analytical procedures are mainly applicable in those scenarios. First is when there are numerous transactions, when there are n number of transactions, a large volume of transactions, and these transactions are similar in nature. That means there are routine transactions, it is similar in nature, and these transactions I can easily find out the relationship between these kind of transactions. These transactions are predictable in nature. So two things. One is when there are large number of transactions. Secondly, these transactions are predictable in nature. Then what? When the inherent risk is more. In those cases also I use substantive analytical procedures. Then what? Source. So first we'll come one by one. First is the volume of transactions. Volume of transactions is when there are n number of transactions, and these transactions are what? Similar. Routine transactions. Routine transactions is those transactions which is occurring in the day-to-day business activities. Those transactions are there, and these are common transactions. There is nothing unnatural or non-routine transactions. This is happening say for example your related party transactions or non-routine transactions. These are nothing like that. These are your routine common transactions, but the volume is huge. In those cases also I use a substantive analytical procedures. Okay, so these analytical procedures I use. Now this is one scenario. Now second is these transactions should be predictable. Predictable means what? I should be able to find out the relationship between these kind of transactions. Relationship in the sense what? Say for example I have this much. Say for example there is like a 50 lakhs turnover or 50 lakhs sales that has happened for a particular company, say XYZ, and there is a cost of sales. Cost of sales is also there. Now these two are, there is a relationship between these two, the cost of sales and the sales. So these kind of transactions, these are usual transactions, and there is a kind of relationship that is existing between these kind of transactions. Say your sales and cost of sales, or say maybe your interest and the interest bearing liabilities. Say total interest that is I am paying and the total loan amount or current loan amount that is there in the balance sheet. So these have a relationship between the two. But say for example I am comparing or making out a ratio between the total tax paid and the total miscellaneous expenditure. Doesn't make sense. So there should be some kind of relationship between the two kinds of components. This is one. Second is what? Second is availability of data. So what kind of data that is being available? So if the data, first of all, the data that whatever I am using while using the substantive analytical procedure should be a reliable one. So we'll check the conditions for reliability, when I can say the data is reliable. So second condition is the reliability of the data. So the data should be reliable. There should be large number of transactions. The transaction should be predictable. When the assertions are there which needs to be evaluated upon, then also there requires a detailed testing or a detailed procedures has to be applied. In such cases also I go for substantive analytical procedures. Now inherent risk. Suppose, what is inherent risk? Inherent risk is one particular classification of risk in which the risk can never be reduced to zero. Whatever methods a particular entity adopts, this particular risk always exists. It can only be mitigated to a certain extent. It cannot be reduced to zero. These kind of risk is always there. These kind of risk are called as inherent risk. When the inherent risk is there, that means whatever controls the particular entity is taking, there will be some kind of risk, and this particular risk will have an impact on the financials, maybe say for example a significant impact on the financials. In such cases, we use your substantive analytical procedures. Normally when substantive analytical procedures are used, when your internal controls are not working properly or not effective. So here, even though the internal controls are effective, the internal control risk is high. So whatever control procedures that the company adopts, there will be some kind of risk there. So in such cases, again, I will be using the substantive analytical procedure. So we'll see what are the circumstances under which I will be using the substantive analytical procedure. One is when I have large number of transactions. Secondly, when these transactions are predictable and there is a relationship among these kind of transactions. Now, the kind of data that is available to apply this analytical procedure should be reliable. Source of data, I have to check the source and the nature and relevance of the data. The next is what inherent risk. When the inherent risk is very high, in such cases also I will be using the substantive analytical procedures. And when there are n number of assertions which needs to be checked upon, so I need to check in detail. In such cases also I will be using my substantive analytical procedures. So these are the different scenarios under which I will be using the substantive analytical procedures.